Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, this is going to be a quick one. I have to be tail lights soon, and I'm going to be traveling, so no interview next week, although I did do an interview on the Money Levels show with Daryl Thomas, so I'll post that here so you guys can watch it. Alrighty, starting out as always with the S&P 500. Now we hit another new all-time high, up 1.1% for the week. Closed the week at 58.15. I've started drawing in these yellow and red and green lines to kind of, we can see the support levels here. I got the white line, the resistance up here drawn at 6,000. Nothing real scientific about it other than it's an even number. But real one that we're going to want to watch when it finally does roll over and drops below 5,200 here, we should have alarm bells going off in our head. And if it drops below 48, then I think we got a real bottom coming. And the dollar is up 0.4% for the week. Looks like Brent Johnson is right with his dollar milkshake theory so far. Do have some resistance coming up here in like the mid 103s. We got the 200-day moving average right there. So that's going to be our initial resistance and major support down here around 100 and 101. And the 10-year yield minus the 2-year yield shot up over a 200% difference when you compare week to week. But still 10-year treasury paying 0.145% more than the 2-year treasury. And 1-month yields, we finally got to our 4.83%. So no longer paying 5.3. We are now down to 4.83. And remember, Wells Fargo is actually collecting this, and so is Bank of America and Chase. They're collecting 4.83%. And in gratitude, they're giving you back 0.01%. So do yourself a favor and put some of your cash into treasuries and collect what they're collecting. If you want a quick macro outlook of the markets every week, then do yourself a favor and check out Lobo's free independent speculator, his Speculator's Digest. It comes out every single week. It is a quick 3 to 5 minute read every weekend, and for me this is a must read and I highly recommend it. There's no spam, no fluff, just his take. He even has his track record posted, so you could go back through here and see what he's actually done. I mean, look at this. He made 58%, Silvercrest 1%, 0.8, minus 10, up 49%, 53%, 125. Some of these are just astounding, up almost 600% here. Really, really cool. So if you guys are betting on these resource companies, which is probably everyone watching this show, do your bank account a favor and read his weekly recap. It's my favorite price. It's free. Check it out in the pinned comment below. Lobo is coming back on the show at the end of the month. So looking forward to that. All right, and gold is up 0.2% for the week. These are the levels I'm really watching here. I want to see, I really think we're going to get down to at least 25.50. But my bias for next week is actually up. But we are pretty stretched in the technicals here. We've gone over the monthly technicals before and how stretched the RSI is. When you're in a real true bull market, some of those don't matter quite as much, and you can get ridiculously high RSI on the monthly. I've seen as high as, I think it was 92. But these are the levels we want to watch. 2550, 2400, and 2300 in my mind would be a back up the truck. Gold divided by the S&P 500. Gold underperformed by almost 1% this week. Closed the week at 0.46. So once we get up here to 50, right? Once you can trade half of a share of the S&P 500 for 1 ounce of gold, then we are off to the races. But the general masses need to realize that whatever they're doing in their brokerage accounts isn't working, And at that time, they'll see gold is at 3,000 or above, and they'll start rotating in. GDX, the major miners, is up 1.3% for the week, looking fantastic. There was a moment here, a tick if you could catch it on, when was that? Wednesday. It just bounced right off with a reversal bar on the 50-day moving average. That was a trade if you could catch it. I did not, but trimmed some of my position. I'm looking for a retracement, maybe back down here to 36. If gold rolls over, that'll happen, and probably then some. And then I will add back in to the major miners. GDXJ is up 1.8% for the week, showing kind of a bearish reversal bar there on Friday. So although it looks like GDX is going to move up, this one looks like it might tick down just a little bit. Major support is down here at 44 and resistance is at 52. Franco-Nevada, the best gold royalty company on the planet. Talked about this last week to watch for this 200 moving average right here. I drew a circle on it so that to highlight it here. Came down, touched there. I think I said the limit order around 117. We're going to have to up that to about 118 or 119 now. We got a rising 200-day moving average. This is looking fantastic. I think any approaches down here to the 200 moving average are good entry points. Stink bid is down here still at 115. Wheaton Precious Metals is up 0.7% for the week. Kind of looks like it's putting in a topping pattern here. This one's really leveraged to silver. Major supports down here at 52.50 and resistance is up at 65. So I'd like to add more into this. I just want to see a retracement back down here, kind of get the technicals, down here. We want to see RSI in the 30s or maybe even the high 20s. Gold Royalty Corporation is down 0.7% for the week. Got a limit stink bid in here for $1.20. Like this one a lot. I think that it will do quite well in the gold bull market. It still hasn't quite performed like we thought it would. We had that little hiccup with their with the ferrous copper stream, but I think as time goes on, their cash flow is increasing every year and will continue to do so. And then once we get the real gold bull market on and our majors have really performed, I think this one will do exactly the same, but later on in the cycle. And Origin Royalties up 0.6% for the week. I pulled the limit sell order for 120. I'm going to ride this one out until we get the arbitration resolution for Altius before I sell any more of this. But I think any approaches towards this white line right here, I should probably make this green because green makes you want to buy. There we go. And any approaches towards this green line right here, I think are good entry points. It's been a pretty reliable indicator since we started moving up back here. And Barrick Gold is down 0.6% for the week. Took a little bit of profits the week before last, not a lot. We just did it at 21. That seems like a pretty good resistance level. Decent support level down here at 1850. So that might be good if you guys don't have any of this or you want to add to it. I think that's a decent entry point. And Newmont up 1.8% for the week. Got resistance right here at 55. Maybe I should move that up to like 56.50, but 55 lines up with quite a bit of support going back years. So I suppose that's fine. As far as entry points into this, I like 42 a lot. It has a lot of technical resistance. I don't know that it'll get there, but we got a rising 200-day moving average. I don't see any purchases now. I suppose there's an argument here. You could just add on this 50 moving average right here. That's been pretty reliable since March of this year, just any approaches of that 50 moving average. But I like to get deals. I like to find things that are cheap, and I think it'll get cheap if it gets down here into the 40s. And Agnico Eagle up 0.8% for the week. So I had a little bit of a re-rating, just a bounce and then right back up. So you got a tiny bit of support here at 77, but a lot more support down here at 73. Resistance is going to be up at 88. Equinox Gold up 2.8% for the week. So we got their earnings report coming out on October 30th. And this is my stink bid down here in for $5.25. I actually probably need to move that up. I'm going to make a note of that right now. We're going to move it up to $5.35. And that's just lining up right here with this 200-day moving average. So I'd like to see this get re-rated. I think that once the quarterly report comes out, there's probably going to be a pretty good re-rating on this. So maybe I'm picking up nickels in front of a steamroller here, but yeah, I think this one will do well. And G Mining Ventures up 4.8% for the week. Got some pretty good support down here at $6, although you could do the same thing here, just try to catch this rising 200-day moving average. Resistance is going to be up here at the all-time high at $7.90. If you want to hear more about companies like this one, join us at the Rule Classroom. The Rule Classroom is loaded with free content like right here. We are up to 8,985 members. That is 51 more students than last week, so you guys are finding value in this as well. There's more content on here than there probably should be. After that, if you're a serious investor, then join us at the Rule Classroom Plus, which is $30 a month. And when you think about how much you're actually betting on these companies, that's basically free. Links are in the pinned comment below. I will see you there. And silver is down 2% for the week, although a fantastic close here, $31.75. We've got resistance up here. I drew it at 33, maybe 32 is a little bit better just because we have a lot more resistance when we look back over the long run. Still holding above 26, that's fantastic. Rising 200-day moving average. I think this is probably going to touch this line a couple of times before breaking through. We really need to get some sustained close above 33 and then on to 35. And after 35, there's almost no resistance. That's where I think it'll go parabolic, and we're going to want to trim a lot of these positions. Gold silver ratio. Gold divided by silver. Gold outperformed this week by 2.2%. And that's, well, silver was down 2% and gold was up 0.2. So that math checks out. Ratio right now is 84.2 to 1. So 84.2 ounces of silver for 1 ounce of gold. So by this ratio chart, silver is still pretty cheap. SILJ up 2.1% for the week. So silver's down, SILJ is up. Got support down here at $11.25. This stink bid down here for $8, that's an absolute pipe dream now. But major resistance up here at $15, although we have some initial resistance kind of where we are now. Don't see any entries into this. We want to see the technicals kind of wash out a little bit, but if it gets down into the 11s, I think our RSI is going to be at the buy point. Pan American Silver up 3.5% for the week, looking fantastic. Initial resistance is going to be up here at 24. Support is going to be at 19. My first trim on this is going to be around $28. That's just lining up with a lot of back resistance right back there. But so far it's just trading in this range right here. I think any approaches towards 19 is a buy. And, you know, you could entertain trimming around 24. And Silvercrest Metals down 0.3% for the week. We had the merger come through with Core Mining, which solves a problem for both of these companies. Core had a cash flow problem, and Silvercrest had the old one deposit problem. So this solves both of those issues. Now this company, if the merger actually goes through, won't only be, sole asset down in Mexico. We're going to have some other assets in there. We're going to have cash flow, and we're going to have multiple deposits with the combined company. So I'm very excited about this. Mining is hard and failure is common. And as Rick always says, bet on big deposits like this one. Small minds make you small money. Big minds make you big money. We want to position ourselves in front of the tsunami of cash that is coming before everyone else. So how do we find these big deposits and then bet on them before the masses? I'll tell you how. You join us for the Tier 1 Asset Boot Camp this coming Saturday, October 19th. Rick Rule will be putting on a clinic. This boot camp will focus on Tier 1 deposits, unknown and under-owned world-class deposits with 10x opportunities in a 3 to 5 year time frame. Imagine putting $1,000 to work and 3 to 5 years later, you have 10 grand. Those are the kind of gains we're talking about. And for $99, you can learn how. Like all his boot camps, it comes with a gold-plated, that's a pun intended, money-back guarantee. If you didn't get your money's worth, you get a full refund. Your brokerage account will thank you. Link is in the pinned comment below, and thank you to everyone who's using that link. You're supporting my family and my work and bringing you more content in the process. I will see you there. Copper, paging Dr. Copper, down 1.8% for the week. I think any buys around this white line right here, I think we're going to have some serious pullbacks in copper leading up and through the recession. If we go back over history, that's exactly what happens and has happened over the last 4 recessions. So I think we'll probably get a repeat here. I think Lobo's right. I'm not going to sell any of my copper positions. I'm just going to add to them as that happens. Hopefully it does. COPX, our favorite copper miners ETF, got some pretty good support down here around 42. Resistance right up here at 53, and that's just lining up with this back right here, that high. Yeah, I think as far as like initially next week, it kind of looks like copper is going to be moving up. But as the recession plays out, I expect we might even get these buy points again back here. COPJ also down 2%. And it just kind of trading in this range, like resistance right up here, 23.75, support down here at 19.50. I think any buys approaching these green lines down here, like 21 to 19.50, are pretty good entry points. Or you could just catch this rising 200-day moving average, which is right around 21. And Freeport, new addition, down 1% for the week, kind of fell back down here, bounced on the 20-day moving average, and then shot right up. Got major resistance right around 52 and support, pretty good support right down here at 40 bucks. But looking like we might get a little golden cross here in Freeport coming up if the price continues to go up. I don't think I would buy that one. Look at the RSI down here. It's at 60. We want to be buying when it's down here in the 30s or the 20s. And Arizona Metals up 3% for the week. Duncan Middlemiss did a interview recently, which is nice. Got some investor relations news. So Google YouTube for that. Just put Arizona Metals. It'll be the first one to come up. I reached out to Arizona Metals for an interview. They said that the show is perfect, but I've yet to hear back. So hopefully we'll get a response. Munduro Capital up 4.3% for the week. Got some decent support here around 13. So I drew a yellow line for that. And then we got some really good support down here at 9 cents, although I don't know that that'll hit until probably in the heart of the recession. But I got a limit order right there at 9 cents, so we'll see. I might actually add here, maybe if it gets down to the level I bought it before at 11. And uranium is up 1% for the week. Closed the week at 83.40, so we're comfortably above $80, which is where we got the green line. Resistance is going to be around 100. SRUUF is down 3.4% for the week. You can tell by this down arrow right here. I sold a little bit more. What day was that? On Monday. Just trimmed a little bit more position. And yeah, the kindergarten method of buying this when it's at a discount and selling it when it goes to a premium. That premium happened last week. I tweeted about it. For anyone that cares, you can follow me on Twitter, Steve Barton 101. And I usually put in whatever trades or buys or sells I'm doing there, so you guys can follow along if you want. I'm just going to wait for this thing to kind of approach this upward channel trend line right here, and then I will do it again, because by the time it gets there, it'll probably be at a 12 or 15% discount. And Cameco is down 1% for the week. I don't see any buys here. We got the RSI in the clouds at 72. It just went underneath this yellow line, so I would expect a little bit of a pullback going into next week. Got some good support at 44, and then a lot more support at 41. Resistance is going to be at 56. Kazatomprom, the biggest uranium miner on the planet, is down 0.9% for the week. So I have this arrow drawn in, and I got a limit sell for $38.30. So we'll see if that hits on Monday. I guess it's a little deceiving. I should put it over here because it didn't hit yet. But yeah, the risk is getting higher and higher by the day. All of their U3O8 is going to Russia and China. And I got to believe after this election cycle, we're probably not going to know who the president really is until into January. But I can't imagine them not sanctioning this, with everything that's going on in Russia. And I'd like to be out before that happens. I was asking Rick about this, and his main concern is just the turnstile of management. I think it's 19 executives have been thanked and excused since 2020. So that's not good. And remember, 75% of this is owned by the state of Kazakhstan, and only 25% is available to us. So I'm going to be exiting that. And remember, there's quite a bit of Kazatomprom in URNM. So if you own that ETF, about 15% of that is this company as well. All right, URA is down 1% for the week. Looks like we might have a little bit of a topping pattern here. We got some initial support right here around 28.75 for the 200-day moving average, but really stretched technicals. We had a really nice double bottom here in uranium about a month ago. Took advantage of that. Had a nice price appreciation. What was that if you caught around here at the bottom? Yeah, up 30%. So, if you're a trader, might be time to take some profits. URNM down 1.3% for the week. Kind of the same story here. So we got some more back here down at these low levels. Love that. It's had a nice little run. Stretch technicals. Got the 200-day moving average right above it. So resistance is around 49. And support on this one is just going to be this green line moving up. I think any approaching of this green upward channel trend line right here is a buy, which by the time it got there would probably be around $39-40. URNJ down 0.6% for the week. Resistance is basically now around 23.50, and then you got some major resistance up here at 31, and support down here at $17.50. We just drew this $20 as a pretty good buy point, I think, but yeah, I think some of these are getting a little stretched, so probably going to have a pullback in uranium. And UROI, Uranium Royalty Corporation, down 2.6% for the week. Really like this $1.90 support line down here. I don't think it'll get there, but it did close above the 200-day moving average, but still really high technicals. I don't see any bets on this. The bets were about a month or so ago. And crude oil is up 1.7% for the week. So we had a really just a spike last week up here. It got above 77 for a hot minute and then fell down. This is the missile premium with all the conflict going over in the Middle East. We talked to Elliot Gu over the last week, and we did a deep dive, a 2-hour-long discussion into energy stocks with him, and he has forgotten more about oil and gas than I know, and got a lot of positive feedback. Put a link up here so you guys can watch it. If you have anything bet on oil, gas, nuclear, or coal, I think that is a must watch. XLE is down 0.4% for the week. Got some pretty heavy resistance right here at 94.50 and really nice support down here at 83. If you don't have any position in oil, I think this is probably the first one you get for just beta in oil. Rising 200-day moving average. So you do have a bit of support right here. Maybe if you have no position in oil, limit order around 89 or 90 will get you started. And then down here at 85.50, 83, and the stink bid down here at 79.75. XOM, ExxonMobil, our favorite here, down 1% for the week. We had the missile premium spike, got a new all-time high, and then we closed at, what is that, 123.61. So basically have resistance where we are now. Same kind of thing for this one. If you have no position, maybe your first entry here is at 120, and then 114, and a stink bid down here at 109. Actually, the real stink bid on this one is going to be around $100. Maybe the recession will give that to us. I love this software, TradingView. I would have absolutely no idea of when to buy and when to sell if it wasn't for this software. I mean, how are you going to cherry pick these bottoms right here unless you're looking at a chart? And I know you guys are liking it too because you're using the link. So thank you. It doesn't cost you any extra. I love it. And I love getting your guys' emails and your tweets on this, on your charts. You know, you screenshot your chart and send me an email of it. That's pretty cool. And, you know, I mean, there's 10,000 of you guys and there's one of me, so I can't possibly see everything here. And a lot of what I get from the content here is from you guys. So I appreciate that. You can try this out free for 30 days with the link in the notes below. There's absolutely no obligation. And if you don't like it, well, it's free. Blackstone Minerals, we got a dividend coming here in November. Had a little price spike here on, what was that, Monday? Yeah, Monday, and then shut right back down. So this should be a white line. Let's adjust that. There we go. So got resistance at 15.50 and then support down here at $14. So maybe as the dividend approaches, we will get a sell-off, which we usually do, and then we'll probably run another option on it. But this thing pays almost 10% dividends, so that's pretty much what you're in it for. Natural gas is down 7.8% for the week. Bias last week was down, and it looks like that's played out. We do have a golden cross here in the in natural gas, but I still think we're probably going a little bit lower. We got some pretty major support around $2 a million BTUs. Devon Energies finally playing out. This is great. Up 1.3% for the week. Got some initial support right here at $40.60, and then resistance is up here at 46. Paydo Exploration. Okay, this one's awesome. Down 2.8% for the week. So if you think Canadian natural gas is going to do well, then this is probably the one you want to get. We did talked about this one with Elliott along with Blackstone. Got some initial support here at $10.60, so I upped my limit order to $10.65, and then we also have a stink bid down in here for $9.75. And coal, thermal coal closed the week at $149. Met coal is down, closed the week at $211. And our favorite coal ETF, because it's the only one that exists, is up 0.9% for the week. So support's going to be down here around $20. This chart isn't going to be a huge help for like finding entry points just because there's very little history. We are up to 11 million in assets under management though, so that's up 100K from last week. Still 470,000 shares. If coal continues to get sold off, I think we're going to get some selling pressure on this. AMR. All right. Hopefully we found a bottom here at 185. I had a limit order back here for 180, which it came within $5 of hitting. So I think I'm going to put in another limit order right here for 185, and hopefully we get a double bottom right there. Looks like we might actually have a retracement right here. Let's see. Yeah, we do. So if you want to play the retracement, then your limit order is going to be about 215, and that would hit right in that Fibonacci. So if you get another bar that looks like that one when it comes back down, that could be one entry point. I'm a cheapskate, so I'm going to wait for 185, which may never come. And Glencore is down 2.9% for the week. Just closed right on that 200-day moving average. We got some stink bids in down here for $9.40. And BTU is up 2.7% for the week. So we faded the put, did not put a put on this thing. Initial resistance is going to be up here at 27.25. So we'll see what the action looks like next week. Maybe I'll finally run that put I've been talking about forever on it. And platinum is down 0.6% for the week. Also have a retracement here in platinum. So there was a tick right there. If you could catch it, it got down into like 950, 955, and then shot up. So if we get another double bottom in that, that could be an entry point. But I really like this order down here at 900. And PPLT is down 0.8% for the week. This is basically a carbon copy of the platinum metal itself. Had a little retracement there and then shot up, but I really like entries into this one around 80 bucks. And Palladium, this one killed it, up 6.9% for the week. Now some news has come out that Russia is, I don't know how true this is, but basically they've said that they've stopped selling platinum and palladium and they started becoming a buyer. So maybe what we've been waiting on for a year and a half now is finally playing out. So we'll see. We got a golden cross here in palladium. You know, I think any approaches down here, just like platinum, around 900 bucks is a deal. And we got initial resistance up here at about 1100. So to bet on that in the stock market, this one's up 5.9%. Is PALL, support down here at 80, resistance at 100. I'd like to see this come down and touch the 200-day moving average, although we just got a golden cross right here, so that may not hit. And SPPP, both platinum and palladium, up by 2% for the week. We have resistance now, support at $9, stink bid at $8.25. Another golden cross here. But the technicals are pretty stretched on all these. You know, RSI is kind of high, so I don't see any buys in this region, but any approaches towards this green line right here around $9, I think are a deal. Nickel futures is down 0.9% for the week. Close the week at 17,600. NIKL, if you're going to play a beta play on nickel, this is it. I'm not aware of another one. And nickel ETF, looking interesting here. Looks like it might get scooped up here by the 20-day moving average. Just closed right above the 200-day moving average, but technicals are still pretty stretched. Support at 1150, resistance at 14, which is just 50 cents north of now. Iron ore down 2.8% for the week. Just kind of trading in this range here from 92 to 112. So I think any approaches down towards 92 means it's getting cheap. And BHP down 2.7% for the week. So just shot up, got all the way up to 63 and then settled the week at around 59. Above the 200-day moving average right now, but technicals are pretty stretched. I think a limit order around 55 and then another one down here around 52 would be your stink bid. And Rio Tinto, same pattern as BHP, just shot up, held up there for a few days and then came right back down, closed above the 200-day moving average. That actually looks like a bit of a retracement here. So for you traders, yeah, okay, so hit just around that 50% retracement and then shot up. If you get like a double bottom right in there, that might be an interesting entry point. And the PIC ETF down 2.6% for the week. We've got resistance at 44, First level of support that I see is going to be filling this gap right back here. So it'll be at $40 and the stink bid down here at $36.25, but stretch technicals, so I don't see any buys now. And Bitcoin is up as of this moment, recording on Friday, up 0.2% for the week. Looks like it's still kind of obeying this this downward channel right here. And I saw a tweet by the guys at North Star Bad Charts, and they basically called it the I think they called it the Bitcoin Doom Dome. And I might be drawing this wrong, but he basically had this kind of dome going like this, and his chart looked a heck of a lot better than mine. But I don't think that Bitcoin is going to do well during a recession. I really hope I'm wrong, and I really hope that this actually is the people's money and performs as such, but I don't think it will. Alrighty, well, I hope you guys got something out of that. Be sure to check out the Rule Classroom and join us this Saturday, October 19th, for the Tier 1 Assets Bootcamp. $99, and you'll learn how to find the big deposits and avoid the small ones. Thank you for tuning in. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.